I'd like to first of all introduce Ron van Bloos here. Ron is chair of the Senior Housing and Healthcare Association, and obviously that's a new, relatively new organisation, been founded in the last 2 years, specifically to try to bring some transparency, bring some extra information, and bring together those people involved, both from the developer side, the investor side, and the operator side. Bring those together. So I'll hand over to you, Ron. We've got a super panel waiting for you, but let's start with you, Ron.
Yeah, thanks, Richard, for your kind introduction. We are very pleased to be part of the International Investors Lounge. And it's also quite a unique momentum because it's actually the launch of our new annual report. And I would like to invite one of the founding members, the Chief Operational Officer of Aedifica, Raoul Thomassen. Because you're a founding member, Raoul. I think Aedifica is one of the important members of our association and also a front runner in ESG. You wrote an amazing article about your strategy, but especially your social impact. So I would like to hand over the first piece to you and maybe a short introduction, especially regarding ESG. What's your goal?
Thank you, Ron. First of all, congratulations with this annual report. I think it's already a big step. I know that in this association we have operators, we have developers, we have landlords. We may not agree on everything, but I think this topic, CSR, is something that we are as a sector very much aligned on. And I think also the SHSA can play a big role in that because it is going to be one of the challenges for the medium term. Within our company, Aedifica, CSR is critical. We need to have a portfolio that is future-proof. Many of the companies here are aligned to the Paris Accord, which means that our portfolio would need to be with net zero emissions by 2050. That's a long road, 28 years, but we have to take some steps already quite soon, and we're working on that. We highlight some of these steps in this document, and I think if you will see also what our competitors and the operators are doing with a good cooperation, I think those goals are achievable. Even if in the short term we might have some adverse interest climate, I think this is still something that will require a lot of attention, and we will be able to get there in due time.
Well, great. We have a super panel, but we also have a great warming up. And the warming up is by Marcus Roberts from Savills. And it's actually an introduction also regarding the market of senior living and healthcare real estate. So we actually asked Marcus to give a TEDx way of introduction. So he has 5 minutes to share the most valuable insights. So Marcus, the floor is yours and rock it.
Well, thank you, Ron. Ron. Thank you. I'll promise to keep this to 5 minutes. If I don't, I'll be tasered, I think. So I'm Marcus Roberts. I'm a director in the Operational Capital Markets Division at Savills, covering the living sectors. We operate on a pan-European basis from Ireland to Czech Republic and Nordic South through Italy and actually into Greece. We also have a debt advisory business service line and a corporate finance within the OCM platform. So we've just launched our Pan-European Healthcare Report. We've got a number of sort of slides that I'm sure the panel will want to sort of pick holes on over the next sort of 30 or so minutes. The first slide here, that's Europe's ageing population, which underpins future demand. So the circles here represent over 65s in 7 countries that we have analysed. So there's 75.5 million people over 65 in 2022. 21% of the total population. And this is going to rise to an amazing 90 million by 2032, which will then be 25% of the population. So I think in terms of supply and demand dynamics, that shows that we are in a sector that is going to sort of carry on burgeoning in terms of occupancy and obviously, hopefully, rental growth as well for those operators in the room. In terms of the next slides, these are the large and well-established care home markets across Europe. So we've got, we reckon, about 115 billion of assets of GDV in total. About 40% of that, which is about 46 billion, is in the private sector. The largest private markets, the UK, about 82% of beds are private, about 18 billion euros. And Germany is the second largest market with about 40% of bed spaces and about 14 billion euros of GDV, of investment value. Number of cultural differences in Europe and their approach to care homes, and many of you will probably know these markets far better than I. But Southern Europe is probably sort of where it's more likely to be where care is given by family members for elderly relatives, which is why there are lower levels of care home provision. But things appear to be changing with smaller families, less capacity to do so, as well as a greater levels of high acuity need as the population ages. It's also typically sort of more of a fragmented market with many care homes run by smaller operators, smaller sort of mom and pop type organisations, which makes aggregation for investors and particularly the private equity market who want to develop at scale and establish portfolios. It takes time for aggregation. The next slide, total investment that's been significantly over the last sort of few years, particularly from 2018-19 onwards, with the average about sort of 2 billion euros per annum from 2013 to 2018. Then I think there's also been, Germany definitely the most liquid market to date, with more than 5 billion which has been invested since 2020. Both, that's a sort of testament to the number of portfolios that are there to invest in for institutional investors to come and deploy capital at scale. Investors, most of those are sort of cross-border investors, and that's really been certainly something that we've seen in the most recent years. Next slide, final one. This is the positive performance during the GFC. UK healthcare total returns about 4% in the 3 years following the GFC, compared with probably sort of minus 7% compared to all other sort of property asset classes. Australia was was 9% total return for healthcare versus 2% for all property. The position that we find with the sector is, it's now we're going through a period, a bit of uncertainty, but that certainly provides opportunity for the panel members here today, especially when we're looking at sort of ESG, which is obviously sort of a major factor, major investment criteria for many here today. We've got old and energy inefficient stock in many of these markets. And that obviously sort of means that there will be challenges for future needs and tightening regulation, which I'm sure Stefan will probably sort of touch on as well in the over the next sort of 30 minutes or so. But the opportunity for investors is there to reposition assets, some of these older assets, in the market. So what does the future hold? Well, I think the market is counter-cyclical. Now, we've got an ageing population, we've got a structural demand that underpins the sector. We've got strong counter-cyclical characteristics driven by investor appetite. But we've got challenges in deploying at scale, which is difficult due to the fragmented nature of many of these markets, particularly in Southern Europe. And also, I think for many new investors, it's the need to understand the nuances around some of these smaller markets where represent an opportunity for investors to access at scale. Hopefully that's about 5 minutes, not too long. You're still awake, which is obviously great news. Great for me because I haven't been tasered. Thank you.
Well, great. Excellent. Yeah, you nailed it in 4.30, so great job. And also, I think you still have 30 seconds left. Nevertheless, this is where the SHA is all about. Thought leadership, data-driven, excellent work. Oh, Yeah, we're going to the expert panel on Richard Betts. I would like to do some co-moderating with you. We've prepared some excellent questions, easy ones and difficult ones, but we've got a first-class panel with members and also an invitational one. So shall we introduce the speakers?
Great. Good. Why don't we start at this end? So let's do introductions and move our way down. Is Raoul joining?
Excellent.
Is Raoul joining? No. Great. And they're already on. Pablo will sort that out for you. And there's two down there. And if we can do it in teams so that we don't need to shuffle them two back. Great. Perfect. Let's start with introduction.
Thanks for the introduction. My name is Nikolai Schmidt. I'm at Swiss Life Asset Managers, responsible for healthcare investments in Germany, the Netherlands and Austria since 2015. So far we did launch six funds with an investment volume of more than 2 billion euros. And we want to grow more and more. We have a lot of equity to spend on. And since we are investing in healthcare since 2006, we can be considered as one of the pioneers in investing in Germany's healthcare market right from the beginning.
Great. Yeliz.
Thank you. Hi, my name is Yeliz. I am Chief Operating Officer at Cofinimo. Cofinimo is a pan-European REIT. We're present in 9 countries, and I have to say we started with healthcare in 2005.
Wonderful.
We have a portfolio of around 6 billion euros, and like every investor in the room, we do want to grow further our portfolio in a sustainable and qualitative way.
Great, thanks. Andrew.
Hi.
It will work, yep.
Hello. Hi, my name is Andrew Smith. First of all, Richard, everybody, thank you very much for the invite. It's great to be here. It's good to be back at Expo. It's all very exciting. I work for a firm called Northern Horizon. Northern Horizon, can everybody hear me? Is that one working?
Yeah.
Good. So Northern Horizon's 20 years old. We have listed funds and non-listed funds. We're based in the Nordics, and we have specialist aged care funds in the Nordics. We have about 2 billion under management.
Great. Stefan.
Hello, I'm Stefan Voss. I'm a real estate lawyer with CMS, an international law firm with more than 3,000 lawyers worldwide and tax advisors. We are a full-service law firm, and that means that we also have the healthcare sector as a very important sector with experts, and we're trying to help all the investors or operators to sort out some legal issues that we maybe touch on later on. Thank you.
The one that's just been done,
Marcus Roberts, I think you know me.
Great, Marcus. Super. Let's just start, I suppose, with a couple of questions around where we see the market at the moment. Let's start with you, Yeliz, I suppose. What are you seeing at the moment here? What are some of the key trends for you?
Well, the key trends, as said many times today in terms of healthcare, that it's a fundamentally stable business segment, right? The elderly people, unfortunately, the ratio of elderly people is increasing, and the need for care is increasing as well. Having said that, we have, it's an asset class that was so interesting for many operators that over the last few years there was a huge yield compression. I think, having spent here almost 2 days, I think we're in an era of uncertainty about how this talks about pricing, the operational business models will evolve in the future. That's my major takeaway of this Expo Real.
Okay, good. And looking, I suppose, at some of the kind of challenges in the market. Obviously, there's inflation. We've got issues with the economy, potential recession, cost of living crisis. Not just in the UK or in Germany, but across the whole of Europe, really. So I suppose, what are you seeing as some of the challenges in the market? Let's start with you, Andrew, on that in terms of some of the challenges. Is it more to do with lack of workers? Because obviously there's issues with employment there. What are the challenges that you're seeing?
Well, I think we've been very careful with the acquisitions of the buildings that we've been making. It's been brand new stock, so we tend to buy our portfolio is very modern, and that way we get very long leases. It's 100% inflationary linked across the portfolio. And then they're triple net leases. So, when it comes to electricity costs and the rising of things there, it's very nice to be not having an old portfolio of properties and to have, very energy efficient. So we've just been ranked, we're consistently ranked number 1 or 2 from an ESG perspective in our subset of aged care funds across Europe by GRESB. And that's something that we're very proud of. And of course, our tenants want to be in modern stock. And I think that's where we're going to see some issues when it comes to, older stock and what's happening with that. In terms of financing, everybody here is talking about financing. And of course, for us, if you went back to November, we have acquisitions teams in Finland, acquisitions in Sweden and Denmark, across the Nordics. And there was sort of almost arguments internally about, people want to deploy the capital, but how do you, the yields, the pricing, it was so high, and we were sort of rejecting things. And now that seems to have been the smart thing to do, because we're seeing all of a sudden a yield shift, a quite substantial yield shift. And we've just made acquisitions recently on things that we never would have had access to. But some of our competitors who may be listed have got bonds coming up that need refinancing and need to capitalise. But I'm talking too much. Sorry.
No, it's an interesting one. But also you're highlighting the inflation-linked rents, and I think affordability is a very important topic. How do you handle, for example, a 10% index with your tenants?
Is that to me, or is that?
That's a question, and it's an example because I think in creating alignment between operators and investors, these are very difficult conversations. So how can we manage it? So it's not like a Northern Horizon question, but in general, how can we create alignment between the stakeholders?
I can take that. So I mean, it's a little bit different between the countries. So in Germany, it's a slightly different setup to the Nordics. In the Nordics, we have if you're an older person in Sweden and you are put into an aged care home, it doesn't matter. It's not. You're not means tested in terms of income, so it's the obligation of the Swedish government to provide you with an aged care bed. And that means that pretty much 100% of the costs are passed. It's the obligation of the local authority to provide that. So it's, of course, if you owned a shopping centre and you were trying to pass through whatever it is in the Netherlands now, inflation of sort of 17%, and you're trying to pass that through to a retail tenant in a shopping centre, that's going to be quite tricky. But, we have long leases, 100% inflation linked, and so far when we've been passing through, there's been no question on that.
And maybe you, Stefan, from a legal perspective, do you see that a lot of operators are having legal conversations with their investors? And can they solve this in a positive way, or is it very heart to heart?
It depends, of course, from case to case. And in particular, as you already described, it's very different from country to country. For example, in Germany, it's not used to have a 100% indexation clause in the leases. So in particular with regard to nursing homes or care homes, you have maybe from 65 to 85% of the change of the index. And then it's the obligation of the operator to have the refinancing also adjusted in a way in the next negotiation with the care insurance bodies. So a part of this inflation which can be posed upon the tenant can be refinanced by public monies, okay? But of course these discussions will take place, and I think in addition to the inflation, I think the rising energy costs will come up next year, and this will also lead to very interesting discussions. If you're living in a very old building with high energy costs, of course the parties need to negotiate whether or not a new heating system can be installed by an extension of the rent, for example, but that's something really interesting from a commercial perspective.
And do you think it's also maybe a positive that we could speed up the sustainability part? Because the existing stock, when it's outdated, it's a problem, and maybe also for you, Marcus, because you have a pan-European scope. Do you think that the outdated stock in combination with the energy crisis will speed up the transformation to future-proof real estate?
Goodness me, how long have we got? I think that
Shortly, please.
From our point of view, on the advisory side, with a number of assets that we've got in the market at the moment, investors are very, very focused on energy saving and the ESG. I mean, it goes without saying it's number one. I think that coming to your point in terms of the energy costs, it's trying to sort of look at the business plan as to what impact that is going to have on rental performance, asset performance over the next sort of 3-5 years. Particularly for investors, it's about rent cover ratio. At the moment, we're probably looking. Many operators are at around, say, 2, maybe sort of 2.5 times rent cover ratio. That increase of 20-30% on energy costs. What is that going to do to that rent cover ratio? What does that do for your investment criteria? And when you're taking new assets, new opportunities to IC, that's probably going to be their first sort of point of call. Maybe that's something, Elise, is that something you're seeing?
And then I'll let Nikolai talk a bit as well, but absolutely. So at Cofinimo, it was already a topic in executive committees anyways, and the greenfield projects do have an advantage compared to other assets. I am pretty sure that it will even help accelerate the speed of improvement in homes, depending on the access to capital, of course, but let's put that aside. Having said that, all the question is what will happen until you have been able to improve these homes. So there's a lack of 2, maybe 3 years that the operators will have a difficult time. And then, Andrew explained the Finnish model. I think at the end of the day, the elderly care is a societal issue. And I think the governments should play a big role as well in every country.
Yeah, perhaps I would add some other aspect to these topics. Right now, I think the market situation is very challenging for everyone, for the project developers, and on the other hand, for us as an investor, because project developers they are struggling with explosion or cost explosion, time delays for construction. And on the other hand, a lack of qualified personnel, also on the construction sites. On the other sides, we are not able as an investor to pay the prices we were able to pay, I think, until January this year, because the interest rates, they are rising more and more. By the beginning of this year, we had an interest rate of about 1% for 50% LTV. Right now we do have 4.5, and that's very challenging for us. And I think the main challenge for the next 12 to 15 months will be to find a new equilibrium between our yield expectations on the one hand, and on the other hand, the price situation on the market. And we have to pronounce that into the market to get a certain awareness of that.
And is that going to lead to a sort of short-term change of strategy, Nikolai, or is that a sort of more medium, longer-term strategy? I mean, how are you looking at the current economic crisis, for example, in your views about how you're investing and looking to invest?
I think it will last more than 1 year to get the new basis. And in this time, we will have some kind of very, very little transaction volume on the market, because everyone is waiting which level, which basis we will have for the investments and which yields we will have for healthcare investments in the upcoming time. So I think it will last 12 to 15 months.
And given obviously the issues in terms of interest rates, financing costs, is the impact on that in terms of development? Because a lot of this stock has to be developed, obviously, particularly for the senior side, let's say. Does that mean there's going to be a hold on development, or does it mean that you're going to be using all equity for development? Does it take leverage out in a way of this particular sector for the moment? Does anybody want to pick that up?
I think one of the biggest challenges will be for developers, I think, to realise that land values need to come down. No construction cost is construction cost. No salaries is salaries. Energy costs are what they are. Developers will have to realise that to make a bit of their return, to get the exit that they desire, somebody's going to have to take a bit of a haircut, and I think that will start with those property developers.
Okay, good.
Yeah, that's exactly the point. In case of the actual project developments, we have high price, we have high construction costs, we have high financing, we have high prices for the plots. So the project developer is not able to reduce the purchase price. So it will I'm a bit excited about these project developers, how they will proceed in the upcoming months, because they are not able to sell their projects.
Yeah, I can really confirm what you're saying, Nikolai. A couple of years ago, it was really used that there were some kind of greenfield deals with forward construction, so that you buy before the property has been constructed or even a building permit has been agreed upon. And nowadays, all these transactions, as far as I can observe it, are on hold or have been cancelled. So there's nobody in a position to put a price tag on the property and the building. It's impossible.
Yeah, maybe a question, because this morning we had a splendid keynote by Frédéric Durousseau, the Chief Investment Officer of Corian, and he was highlighting especially the demand for new schemes like co-living, co-housing, living as long as possible at home, investing in prevention, and actually minimizing healthcare costs and also nursing home capacity. And I'm also curious, when I look at the investors, how are you moderating this, also trying to facilitate this, because it's more like a residential market instead of a master lease market? What's your point of view? Maybe start with you, Andrew.
Well, at the moment, we are not doing any senior housing. We're just doing purely aged care, and there's a number of reasons for that. We are able to access, on the question before regarding debt, in Sweden, there is a bank, a government-backed bank that helps with residential and increasing the amount of availability of a residential, etc. And they also see aged care as like a residential product, and so we're able to tap into that kind of debt, which is a little bit cheaper than the normal banks. So that's been one of the benefits for us. But that hasn't crossed over into senior housing yet. And to be fair, I'm from Australia. My mum's in Australia. She's looking at aged care facilities there, and of course on the senior housing, there's a lot there, and there is in the UK. But in the Nordics, we haven't really seen that come through yet. We're looking at it. We're thinking about starting a fund for it, but it's quite a new part. It's interesting because there's such the aged population in the Nordics are so wealthy, and they're ready to pay for something that's a little bit better than what there is at the moment. So it will definitely be a new space.
Yeah, maybe also can hand over the microphone to Julisse, because Cofinimo, you have a pan-European scope, active Belgium, Netherlands, Spain, UK. What's your point of view on this development?
I think it's an interesting development, and it makes sense to have that as well. Elderly people cannot be put just in one class. So we need to have several levels of services that are really measured towards the residents. We do have already a diversification of the portfolio, so we look at assisted living as well, but I have to admit, we look at it when it's together with a nursing home project or next to it, so then it makes sense, just to have this flow of residents. In Finland, for example, we do have homes with different types of care that goes from really light care, as I can call it, to the more severe cases. So I think it makes sense that, like Frédéric explained this morning, it makes sense to try also new concept, just to be able to find something that is, made for every age group and accessible to everyone as well in terms of cost, because Frederic was saying it was another cost range, so that makes sense as well. So we're constantly in discussion with the operators and following up on everything, but before investing in it, we just want to be sure that it's mature enough and has a wide range of clients as well.
And do you also believe in terms of diversity, like creating affordable products more on the social housing side up to high end, where you see much more all-inclusive ways of senior facilities?
Well, the inclusive way is, as I said, in our scope. In terms of living or residential, we don't invest in residential. So for Cofinimo, there needs to be a care segment in it. Having said that, a care segment can go from one nurse to a specialized doctor. So that's what I mean when I say diversification within the segment itself.
And there's a growing area of demand, I think, for dementia care and those kinds of things. As we're getting the aging population, that's coming far more. I mean, certainly, what are you seeing in terms of that area? And also, I mean, interesting that you mentioned that there's, relatively wealthy people in the Nordics who are happy to pay more. I mean, you're seeing in the UK actually a slight shift to some degree, which is that people are actually moving to Asia in some cases, moving parents to Asia, where there's more affordable and better care there in terms of what they can access. So it'd be interesting to see whether we might get some movement around Europe as well, potentially. But I suppose, how are you seeing that segment of the market, if anyone's involved in that?
Just very shortly, yes, we are involved in that as well. Again, unfortunately, we see that the need for specialized care homes or clinics is increasing as well. Alzheimer, dementia, you name it, so we're heavily looking into that segment as well, and I think it will further grow in the future.
Do you think, sorry, this is a bit of a rhetorical question, but do you think from an investment standpoint, you are very much more focused on the acute care side rather than aged care or nursing homes, because of that affordability issue? If we're looking at acute care, that's more likely to be underpinned by the state, by the government. So for you, it's far more of a sort of secure, sort of safe, institutionalized and sanitized product.
When we look at a project, we look at different aspects of it. First of all, who's the operator and do they have experience in that particular segment as well? What's their financial strength? Where is the project situated? Is there a growing demand for that type of care? It's not just simple one thing that we analyze. We have to look at many aspects before making an investment decision. However, there are unfortunately some trends that we see in some countries in terms of these specialized clinics. Yeah, and it is an interesting asset class for us as well.
What was the name?
So in terms of specialized care or specified care, it's very challenging right now because it's very, very personal intensive. So I think we already do have a mix of assisted living and full inpatient care in our funds. And I think assisted living is a very, very good add-on to full inpatient care because it's less care intensive, it is less personal intensive, and we do need more of that to get a appropriate supply for the future.
I wanted to pick up a little bit. I mean, there's a relatively short amount of time left, but I wanted to pick up on a couple of issues. We'll come to ESG. To elements around sustainability in a minute, but obviously there was the one of the issues that investors often have when we're talking about these kinds of topics are operational risk, operator risk, and obviously we had the issue with Orpea. In terms of governance, Stefan, maybe coming to you because I know you had some insights there in terms of the report. What's your takeaway, I guess, on some of those governance issues?
Yeah, just very quickly on that one. We made some kind of a study. We reviewed for a couple of countries all over Europe, I think 15 or 18 countries, and we identified how the structure of the compliance regulations are there. So what institutions are responsible for taking care of the care homes. And I think as a summary, we can say it's very different from country by country. That was quite interesting. And in many countries, there are at least two different governmental bodies, sometimes organized by government or, on the other hand, by private institutions. And it was quite interesting because there's some kind of a mismatch that the operators have to inform various or difficult or different bodies on the same issues. So there's much workload on them, which is really unnecessary. And that's something maybe for the future, a lesson learned that could be centralized, that only one body is responsible for this kind of compliance.
Do you want to pick up this?
Yeah, that's an excellent one. And also it's highlighted in the report. And it's also a full download on our website of the SHA. So if you would like to get all the insights country by country, I think it's very valuable information. So thanks for the contribution. Yeah, regarding I think the last part, and that's the ESG, because senior housing and healthcare ticks all the boxes, especially on the S, the social side. So maybe as a final remark from your asset class, what can you provide as a social impact side? Is it like on the employee side? Is it on well-being side? And I would like to get all the insights as a final thought, and maybe Andrew, as an invitational speaker, maybe you can give the first one.
Great. Yeah, well, to be honest, the reason why I'm doing this is I think, I'm 47 and I've been in the real estate industry now for a while, and I think this is an area, for me, it feels like it's time to be doing something where we're actually giving back, and I think in this particular asset class, this is why I'm here. I mean, we have one development or one investment where we have an aged care home. In order to buy that aged care home, we had to buy the kindergarten next door. We have the children that are going at the kindergarten going and singing songs, etc. at the aged care home. In between those, we have disabled care. Around the disabled care is 100% residential that trades at market prices. So you've got kids growing up playing with kids in wheelchairs and etc. in the disabled care, and I think that's a very good thing for society, that the whole thing is actually combined together, and that makes me feel really actually quite good about the world, and that those things are going that way. It also makes me feel good that we're providing new high quality product that the local authority just doesn't have the money to actually do at this stage and take off the ground. So for me, I think the whole sector from that perspective is very, very strong.
I love this purpose-driven one. Nico, maybe your opinion.
First I have to say that all of our funds are certified according to Article 6 or 8 SFDR. So we have a strong focus on ESG in all of our funds. And to maintain the high quality of our assets, we do regular site visits or visits of the assets. We have regular management meetings with the operator, and we try to agree on green lease clauses to encourage the operator to operate in a sustainable way. And also we do track the consumption data of the assets as long as it is possible, and the operator is willing to provide us with that. And that's our contribution to maintain and to develop a high standard in ESG in our funds and the assets and also in the operations.
And Yelise, what's your social driver?
Social driver, well, I think, I can take an example. We actually developed the first BREEAM Excellent labeled nursing home in Spain. It took us some time, to convince the local players and discussions with the authorities. But at the end of the day, we did that not only from an energy point of view, but also keeping in mind the quality of life for the resident and the employees. And I think that as an investor, of course, we're not in charge of the operational business. The things that we can contribute to a better life, as I said, employees and residents, is by creating better buildings, bigger rooms or better rooms, or that's one way of contributing to the S part. And as Nikolai mentioned, we are in constant contact with our operators as well. by providing audits, by discussing also new ways of improving the use of the building, etc. But it's, you know, it's a collaboration with the operators.
Yeah, then going to Stephen, the social impact of your company CMS. Tell me.
Well, for the company CMS, I think it's maybe two things. The one thing is transparency. So we're very transparent to all our clients and, of course, to all the employees, of course, and we try to ask them what are their specific needs and interests. So there's some kind of a cooperation with them so that we can try to change the working environment in a way that is very comfortable for everybody. And I think that's also something which is very important for nursing home or care homes, that the interests of the occupants are also served quite well.
Yeah, and the last one for you, Marcus.
Yeah,
Do you think
okay.
the social driver will speed up the maturity of this asset class?
Look, I mean, I started in real estate probably about 20 years ago doing student housing. So I've sort of come full spectrum on the covered the full age range. So there's a lot of good things that I think the sector can take from student housing on the operational side. I think on the wellness, how that side has particularly developed over the COVID period, and now how operators have reacted to both domestic students and international students who haven't been able to travel. And that's certainly something that we're going to be seeing. Now, we're really keen on trying to see how those operators can go from student through service apartments into senior housing as well. And who knows, some of those operators may then sort of take the best parts and become sort of, you know, nursing home operators in due course. So providing that full spectrum of service.
Yeah, Richard, I think we've come to an end. It's only 45 minutes. We're having too less time, but I would like to do one thing, because I think you're also underlining that SHA is all about alignment, but also collaboration and teamwork. And there's one person I would like to thank for this report, and that's our own Sylvia, because she made this work. And maybe a big applause for Sylvia, because without Sylvia and the team, we wouldn't have this report. And the final word is for you, Richard.
Yeah, really interesting. Thank you, Sylvia. Really interesting to get this report, because before that, I mean, it's one of the things that we've tried to do at the Senior Housing and Healthcare Association is to bring more research, bring more data, bring more transparency into the market. And it's interesting you mentioned there the student housing side, because obviously their class of 2020 moved from what was a relatively very small niche area where there was almost no research and there was very little pan-European activity, to something where it is today, which is a genuine pan-European asset class with a great deal of information around it. And that's what we're aiming to do. If you're interested in the sector, do speak to Ron afterwards, and we hope next time you're on a panel, you won't be a guest, you'll be a member. Thanks very much. Really, really interesting to get your insights. Thank you to everybody for joining us, and look forward to seeing you at the next one. If you're